Good morning, everybody. This is Dennis Wood with the Active Trend Traders. Welcome to Friday's edition of How to Make Money Trading Stocks. I'm finding that now I think we finally settled on a good time to have this at about 11 o'clock in the morning Pacific time, simply because it leaves about an hour after the webinar to be able to go in and make necessary trade adjustments and all that type of thing. And so I want to welcome you. I want to also welcome Mike Traeger, who's joining us from Dallas, Texas.
Good afternoon. Well, good afternoon, here in Texas anyway.
Hey, good afternoon, Mike. Our hearts and our prayers go out for the families of the officers who lost their life last night. That was, watching that from thousands of miles away. I tell you, words can't express, what's going on in the United States these days, and so it's a sad day, and so anyway. And you said you live about a couple of miles from that downtown area, right?
No more than 2 miles. Maybe not even 2 miles. So we live pretty close to where that happened last night. Although we weren't aware of it, we couldn't see or hear anything.
Right.
But yeah, we're pretty close by.
And so anyway, well, with that, let's go ahead and get started with today. Let's see, all the materials that we are going to present are for training purposes only. Traders should paper trade in a new method prior to the risk of their own personal capital. Michael Bishop is not with us today. He's at a barbecue. I tell you, those guys there in Switzerland, I guess they take advantage of the good weather when they can get it, huh?
Yeah, the summers are real pleasant over there. We were in the vicinity about 3 weeks ago, and the weather was, terrific. The winters are harsh,
yeah,
but it makes for real nice summers.
Well, as you can see where I've chosen to live, I don't do harsh winters real well. Anyway, want to remind everybody that the Active Trend Traders, I am very much about coaching, teaching, and all this type of stuff, and I think that is the key, and then applying what's learned is the key to getting over the hurdles and leading yourself to become a master trader. This week, for the last several weeks, we've been focusing on how to basically trade the trends, and introduced a couple of new tools on those. I hope everybody's found those to be very rewarding and enlightening. This week we're going to be doing a little bit more focus on us, and asking ourselves, this is going to be more about the psychology of trading, and we're going to talk about, is it me? Getting past self in your trading. I found that when I started trading for trading for a living, that was one of the biggest challenges I had, Mike, was getting past all the baggage that I had collected over the years that actually was a distraction or a detractor from my ability to trade. I know you went through a process of self-discovery also, but did you have any big challenges that you had to get past in order to become the trader you are today?
Well, I still have challenges. So I think it's I look at it more as a journey than anything with an endpoint destination, because I still have challenges and still trying to tweak some of the things I do and how I do them in order to get better results. My personal challenges are that I think my entries tend to be really, really good, and my exits still at this point tend to be premature.
Yeah.
I do okay, but I know I could be doing better if I could overcome that, tremendous desire to want to ring the cash register.
Yeah.
And therefore miss out on bigger gains. And that's a personal demon that I'm still struggling with.
Yeah, right on. It's it's like a few years ago, I started back and I started playing golf again. And I was a really good golfer before. I was I was a single digit handicap golfer, which is, for an amateur is not too bad back in the day. But I had laid off the game for about 8 years or so. And what I found when I went back to start playing again, it wasn't my the good part of my game that came out, although I saw that occasionally. What came out when I started getting back into the game was all the bad mistakes or the bad muscle memory items that had plagued me from before. And so it was, fortunately, I found myself a good coach who specialized in guys my age, and he helped me through that and gave me a couple of drills that enabled me to start playing and play well again.
Interesting that you mentioned that phrase, muscle memory, because muscle memory, whether it's physical muscle memory, from doing a physical task, whether it's sports or something else, or whether it's kind of like mental muscle memory or psychological muscle memory, can be very powerful and very enduring. And just an example of that, and this just happened with me last night. One of the things not too many people know about me is when I was much, much younger, like 2 lifetimes ago, I was a high school quarterback. And at the age of 15 and 16, I could throw a football pretty well for a 15 or a 16-year-old. Now, where I take my dog to the park here locally, there's a young couple out there. The guy sometimes brings a football with him. And so last night I was throwing the football around with him. Now, I haven't thrown a football in like over 20 years, literally, and it's just not something that you stay with. But guess what? I mean, I can still throw a football about 40 yards, and believe me, it's nothing that I've worked on recently. And that's the power of muscle memory.
Oh, yeah, yeah.
And I think, along with the topic of what you'll be talking about here in a little while, and I know that, we're always talking about paper trading or practice trading when you're testing a new strategy or you want to build some confidence. That is another way to build the muscle memory that's involved in the psychology or the mental aspects of trading and investing.
Yeah, without a doubt. And
you can build that muscle memory when you're practicing, so that when it's real money in real time, it becomes pretty automatic.
Yeah,
and it's just your muscle memory takes over.
Yeah, and and that's especially true. We don't talk very much about the physical side of trading, which is basically actually putting in the orders and putting them in properly and executing, because I know, speaking for myself, I have fat fingered a lot of trades. Sold a position when I intended to buy it and all that kind of stuff, and all of a sudden look at my trading platform and go, wait a second, I'm supposed to be long that position, not short that position, and had to go back in and really quickly reverse. And so anyway, and it all comes down to practice, and in the practice, what I like about especially platforms like Thinkorswim that gives you a paper trading platform, what I like about it is you can go into that platform, the order entry and the conditional orders you can set up are almost exactly like what you can do with the live account. And while trading real money increases the what do you call it, the emotional factors that affect trading, having where you can be almost on automatic for the way you place your orders and all that kind of stuff, it's a great place to practice. Because like I always say, with the paper money account, you can always, you know, at the end of the quarter, end of the day, go back and hit the reset button, and all that money comes back into your account. Unfortunately, when you're trading the real money, you can't hit the reset button, right?
Well, you can't hit the reset button on you know, a live account, but what you know, what you can do with your paper trading is, you know, do it often enough that the order entry, I mean, actually in it all, becomes so automatic that you don't have to think about it or struggle with it when you're doing it live.
Right on.
Yeah, and that's, you know, what we were talking about with you know, the concept of muscle memory.
And so, hey, let's see what we got going on in the market today. Today is July 8th. Next week will be July 15th when we get back together. The big question that we entered the week with is, did Brexit not matter? There was little fear in the market, the U.S. And then also the U.S. market being the only game in town. This week, I come into this week asking myself the question, okay, yeah, you know, hey, I got to give Scott credit, because Scott, you know, he basically has been on our back about he thinks we're overly bearish and all that kind of stuff, and we're just reporting on the charts the way we see them. Scott wants to say that his prediction is we're going to an all-time high, and he kept telling us that, you know, and we kept saying that we were going to pull back hard. I don't remember saying pull back hard. But anyway, that's okay. So we're not at the all-time high yet, but we may be. Who knows? The market can do what it wants to do, because, as we say over here, the markets do not have to make sense. And so, looking at what we have going on for the day, let me get a better color here. The big question is, okay, is this a last gap, or is there more? You know, there may be more. I laid out three scenarios last night based on the charts from last night, and it appeared as if we were moving back up into a level of resistance. We had not broken through it yet, and so we are still, that journey is still underway as we speak. When I look at, and I'll show this when we look at the charts of the S&P, that right now it's doing an expanded triangle formation. Some call that a megaphone top. In other words, where basically the highs may be getting higher, but the lows are getting lower, and typically that is a bearish type of formation, and we are approaching strong resistance. When we get up close to the resistance from the all-time highs, up at about 2130, a little bit over 2130, that will form a level of resistance, and we're very, very close to that right now. The NASDAQ back in, again, like the S&P, back into strong resistance, and the question is there momentum to power through? At this time, we don't know. I mean, we can speculate and say, well, yeah, sure, it's going to power on through. And Anil brings up a very important point, and I think this may be what we're seeing, Mike, is that as far as equity goes, it's almost as if the U.S. is the only game in town. And so we got a lot of foreign investors coming to the U.S. to invest. Wish Michael was here to give us a European perspective, but I think that's fairly easy to say. Russell, watch the top of the Keltner channel and strong resistance. Like I said, all three are pushing up towards resistance. So we still enter the first full week in July, asking the big question, will July this year be weak or strong? Okay, 7 out of the last 10 years, it's been a weak month. Starting about mid-month, it would turn over. But it is what it is, and patience, regardless of your take on the market, is in fact what is required to be able to get, close to getting in on the proper side of the trade. So what do you think about, Mike, what do you have to say about, the market? Does it make sense that it's continuing to go up? And what do you think are some of the catalysts that are actually pushing up? I mean, I know we had the employment report today. More jobs were, created. However, the employment data yesterday shows that the labor participation rate actually fell again, which is, never a healthy issue.
Well, I mean, just like with the Brexit thing, where you had the sort of knee-jerk reaction, literally just for a couple of days,
right,
to the downside. I mean, I think, at least for today, I mean, you're seeing a knee-jerk reaction to the upside on the headline number, and that's the way the market works. Especially in this environment, it's very reactionary to the current news. Does it make sense? Well, no. It doesn't make sense, and on a lot of levels, but it is what it is, and it's reacting to a one-day economic data point. And what we've seen happen with it in the past is that you get the knee-jerk reaction, and then you get the counter reaction, whether it's a counter reaction to the upside after a sell-off or a counter reaction to the downside after a run-up in price. Once a little bit of sense has returned to the computer algorithms that are driving the thing.
Yeah, what's really interesting when we look at the charts here in a little, shortly, the 8 and 20 day moving average clusters on the daily charts, in the past can tend to be good levels of support and resistance. And what we've seen here of late is just dramatic overshoots. They've been slicing through those like butter. And so Kieran said even the Fed is thinking like a retail investor. And so at this point, the question is still there. Will July be weak or will it be strong? At this point, we don't know. We are getting a good strong move today up in the market. The Dow's up 238 points right now, and the S&P is up about 20, almost 30 points, and that's a pretty nice move to the upside. One of the things I do find interesting is the Nasdaq and the Russell are contributing a little bit more to the upside. So here's where we were last week in the percentage of stocks above the 20-day moving average. I've modified this chart, which is the same daily chart of the percentage of stocks above the 20-day moving average. Mike, what I've thrown in on top of it is this red line here, which is the spiders. And as we've been talking here recently, the spider may have pushed past, I think it's pushed past 212. I don't know how high it's gotten to at this point. But as we see here, the percentage of stocks above their 50-day moving average jumped up to 70.5 this morning. And then it appears as if the spiders, which correlates to the S&P, is in fact pushing on up to potentially a new high also. One of the things that I liked about this chart, and Mike, you're the reason why I've modified with this particular chart, is what we were seeing over here. Again, the red line is the spiders, and combining the two charts, and you can do this at www.barchart.com. This aspect of positive divergence when the spiders were hitting this new low here, and also when we pulled back down into where, well, that was just a straight spike up. No positive divergence there, but there was, oh, I know the other part of that is when there turned out to be some negative divergence when the spiders was trying to push up here and hit this new high. You could tell that it was not being supported by the percentage of stocks above the 20-day moving average. So, and then we fell out of sky, dropped back up, fell, and again, a little spike up here. And so now we have pushed back up to the high, and one of the things that I've noticed is the participation of stocks above their 20-day moving average is still not close to what it was back in the midsection of June. So should that be an aspect of concern?
Well, possibly. Yeah, it should be a heads up if the concept of divergences is as powerful as we think it is and as proven as it has been even on this chart, then it should be, a concerning thing given the current setup as of today.
Yeah, and I want to be absolutely clear about one thing is that, okay, Karen just said it's the spiders are sitting at about 212.55, is that even though we may have negative divergence, the markets themselves can still push to higher highs and push up the ladder. All it is a kind of like a piece of information, a clue that something may be coming down line. The market, like I said, can still continue to push high. We could, in fact, break out and make a new high in the S&P. We're not that far away from it, and that's always a possibility. But so, Mike, how do you like this chart where it does have both the spiders and the percentage of stocks over their 20?
I like it, but personally I prefer the candlestick chart.
Okay.
Because the candlestick chart, I think, just provides a little more information. Again, line charts are built on the close. Whether it's a daily chart or a monthly chart, it's a daily close or a monthly close. And the candlesticks will just give you a little more information about, intraday areas of, internal, because they show up with the intraday information.
Yeah. What would be really nice is if I could actually have the percentage of stocks above their 20 as a candlestick, and this is a line chart, but unfortunately that's not an option with barchart.com.
Yeah.
And here we are, basically same issue. This is the monthly chart, and as we can see, we are still functioning. Make sure I get a good picture here. We're still functioning within this level of resistance, and the level of support is actually down here about 185. But as you can see, and that is going back to 2014, that 185 level has actually captured several a couple of flash crashes where we dropped down to it quickly and then rebounded right back up. And we're still operating within this channel, and we'll see if we in fact do break to the top side, out the top side. Going forward, the percentage of stocks above their 200 did pop back up after it dropped a little bit here in June, and so as far as the first part of July, it has started out on a strong note, and again, and it could be one of the, when you put out a probability that, or a number based on past data that, okay, 7 out of the last 10 years, July has been a, significantly down month, and you come up and say, it's going to give you about a, 70% 70% chance that it'll be the same this year. Well, there's always that 30% that we never take into account, or often we don't take into account, which says, well, guess what? It could be a very successful month. And so, so even though, you have the odds in your favor there are those times when the odds, you get that one time where, hey, it is rebounds and continues to move very strongly. That's one thing, Mike, I find oftentimes with a lot of traders is, let's say they're trading a system that gives them a 60 to 65 to even 70% win-loss ratio, and they're thinking, that with the rule of big numbers, you can actually trade a long time and have a lot of losses, so hopefully small losses, before you kick into that, that 65 to 70% of winners. Because in reality, you could trade, if you trade 100 times, there's a possibility that you could have like 20 or 30 losing trades in a row before you jumped into the more successful trades.
Yeah, that's very true, and I know that sometime in the next few weeks you'll be publishing a little article I've written for the Sunday Active Trend Trader.
Yeah.
And I'm, that article gives a really good example in a different way of the same point that you just made, and in fact it highlights a trend following technique that followed, just the S&P 500 over a period of like 26 or 27 years. It's a very simple technique, and the number of winning trades, the win rate was below 30%.
Yeah.
28%, and still overall it was a profitable methodology, a profitable system. And why is that? Well, during that 26 years or so of the back test, there were 4 or 5 trades that generated a huge profit.
Okay.
And if you took those 4 or 5 trades out of the equation, a profitable system became a negative one. So the point is, you never know, no matter what your entry trigger is and what methodology you're using, you never know where the big winner is going to come from. But if you miss those big winners because you're getting discouraged because it hasn't worked really well recently, then in the long run you're just not going to have good overall results because you miss the few big ones that really make the whole thing work.
Yeah, because what I find in when you get a big winner, it's almost you never know which one it's going to be, and it's really kind of funny. It's you have to think of it almost as, I'm going to follow my rules. I'm going to continue to follow my rules, continue to follow my rules, continue to follow my rules, because I know over time it's it's a successful system. And what's really funny is you kind of, by following your rules, it heightens the probability that you will be in the way, or in other words, you will be invested when the big winner hits. And so, okay, here's where we were as of about 9:30 this morning, Pacific Daylight Time. Dow is up from where it was last week. We're up about 3.85, 3.92 on the S&P. The S&P has since climbed a little bit above this. It's up to 2129 right now, which that's impressive. NASDAQ also is up a little bit more than where this is, just a little bit, but it's still negative for the year on the composite. The Russell, what I find very interesting, Mike, the Russell has in fact accelerated itself to the upside. It's starting to catch up here with the S&P, and if the Russell is the leader, and which oftentimes it is, it leads into bigger moves. Who knows? I mean, the Russell may be giving us a clue that that Scott's right. We're going to all-time highs. And so, anyway, that's where we were as of earlier this morning. Let's take a look at the individual charts. Okay, S&P. I have gone back and I've drawn in. Right now, we have the S&P has been working within this basic channel ever since back here in when it first re-entered it in the March time frame. And it has gotten up to the highs of the, well, it hasn't quite got up to the highs of it. It is breaking out above a new level, above the 2120 level, and this 2134 is the level I was highlighting as, okay, that is the, not only the high from last year, but the all-time high for the S&P. At this point, we haven't hit it yet. And oftentimes with levels of resistance, it'll nudge right up to it. And, you know, I'm waiting to see, are the sellers going to jump back in and push this down? And if they do push it down, where might they push it to? As I said, the 8 and the 20-day cluster has not been working as really great indicators of both support and resistance. The 50 is doing a little better job. And so what I'm looking at, and those who were in on the training a couple of weeks ago, I'm looking at, you know, what are these Keltners telling me? If I'm approaching and get close, you know, above the Keltner, then, and depending on where I am in the overall scheme of this, you know, this new trend, or this current trend, is it telling me that, okay, this is a likely place for a pullback, or is this a likely place to push higher? And what's a good thing about trading close to those Keltners is it puts you very, very close to your stop loss, and so it really can lessen the potential stop. One of the things, and as I was showing, I mentioned earlier, is this expanding triangle. And you just take a look at what's going on with that. And typically an expanding triangle, or some people call it a megaphone top, can have some fairly significant bearish implications, but at the same time it can keep bumping its head and pushing its way up as it gradually grinds higher. And so that's what I'm seeing here. Mike, on the weekly charts, which I find very interesting, is that the momentum came right down to the 0 line on a weekly chart. That would have been here, and has bounced. Same thing here on the weekly TSI. One of the things on the TSI, let me get my eraser out. I know you're going to like this, Mike, is on the TSI on a weekly basis. What do we have going on here?
Well, you beat me to it. Since we were speaking of divergences just a few minutes ago, that one that you highlighted becomes pretty evident.
Yeah. And so, again, does it mean we're going to roll right over? Does it mean we're going to roll right over and drop out of the sky? No.
No. I mean, you know, the divergences need to be confirmed, and until it's confirmed, it's nothing more than, you know, something to sort of keep an eye on, maybe out of the corner of your eye.
Yeah.
While focusing on other things, just being aware of what the background information is. Yeah,
exactly. And like you said, just to be aware. And then what are some of the other clues that drop into place? Well, that's when you start looking for, okay, am I getting a reversal signal? Such as, okay, at this point here, we are getting no reversal signal off of this, you know, I'm going to just call this the Brexit flash crash. We're getting no reversal signals off of that. What does a reversal signal look like? Well, it typically is a small body candle that is kind of like a one-day reversal, or a one-week reversal, that is showing, okay, the sellers finally came in and pushed things down. And so anyway, so that's where we're at with that. I'm sitting there looking, and let me go here and get rid of those. And I can say we're continuing to push. Hey, you know, let's see where it closes. If the market closes close to its highs today, then I would look at it as showing that the market wants to stand up a little bit. Again, it's not the close of the day yet. We are approaching it, but interesting stuff. And in the analysis, you know, with the market pushing higher, it doesn't mean that the rest of it is wrong. It just means that its time hasn't come yet.
Yeah, one surprised me a bit, whether it later today or whether it happens maybe on Monday or Tuesday, that we get a little bit of a push up to a new high by maybe a point or two.
Right.
On the S&P, and then an immediate pullback from that intraday, where you produce on a daily chart like a shooting star type candle.
Right.
But everybody will be able to say, you know, the market's at new all-time highs.
Yeah.
So that kind of price action would not be a surprise to me at all. In fact, I would expect it.
And what's very interesting, Mike, is what will happen is that's exactly where people will come in and say, time to buy, and then once
time to buy the breakout, right?
Exactly. And
yeah, and then watch all those people get their heads handed to them when whoever's been participating in this recent rally decides to start taking their profits.
Yep. And so, okay, NASDAQ put in a similar type pattern here. You know, more or less a broadening type of triangle. It did break above on the move from this swing high to this swing low. We are pushing up towards the 1, 2, 3, 6 retracement, which is oftentimes a magnet for these retracements, and it's pushing up hard towards that. And we'll see if it does in fact hit that. If it breaks out of there, then we're looking at a push up to the 138. And look at the symmetry here. The 138 is almost right on the nose what the high was back in in April of this past year. And so we'll see where that goes. And then the 168, which is the next favorite, gets us right back up into a stronger level of resistance formed by last year's highs. And so at this point, we're getting a breakout of this downtrend line. And so we'll see how it closes, you know, going into the end of the day. But at this time, Mike, you know, it's certainly not time to buy, and it's not time to, you know, try to go short either. And so that's where we're at with that. And Gary just said that the S&P was 1 point below its all-time high. And I think it was a little bit more than that. It may have reached up to that. Let's take a real quick look, because the all-time high was...
If it's not 1 point, it's 2 points. You know, it's just about there.
Yeah, it's just about there. I mean, the all-time high was up here at 21. That's intraday high. Was up here at 2134. Take a real quick at the Russell. Okay, Russell. Again, the Russell is looking very interesting. It has broken out of, okay, we had this longer term trend that it broke out of, came back and retested, came back and kissed the trend line goodbye, and is now moving up. On this move here, we have retraced over 70% of it and are moving on up towards this previous high at about the 1189 level. This shorter term, there's my drawing tool. This shorter term downtrend that we were talking about last week has been, you know, by this large break above today, basically takes this part of the downtrend off the table, and it shows us that we are still operating though within this larger oh gosh, what am I want to say? This larger range bound, this larger trading range. I want to show one thing that's very interesting here on the weekly chart is, again, the last 2 weeks have been very strong for this. We're getting up close to resistance at the, about the 1191 level. It's still a long ways away from its all-time highs. And so, but it does look like it's getting in pretty good gears where it could potentially move back on up. One of the things I will be keeping an eye on, and I'll draw this in with my regular drawing tool, is this is what I like about utilizing the TSI, because it does have good, puts in good patterns itself. And what we can see here is we've got a little bit of a head and shoulders kind of formation going. And while we are pushing up towards these new highs, both the TSI and the momentum on a weekly chart are lagging a little bit. And so at this time, though, there are no weekly reversal candles, and there are certainly no daily reversal candles. This spinning top here was showing a point of indecision, and as soon as it busted above that and took off, that voids this. And so we'll be looking for, okay, where are the next small bodies gonna start forming? And as I said, they have not formed yet. Comments, Mike, on the
Well, my comments are that in the NASDAQ and the Russell, as we see the S&P likely going to want to put in a new high.
Right.
Whether it's today or Monday or Tuesday, even if it's only by a couple of points. I mean, you're not getting confirmation of that from the other indexes,
right.
Number one. And the other indexes, especially the Russell, being a little bit more democratic in terms of being more equal weighted. It would be interesting to me, I haven't looked at a chart of the NYSE composite recently.
Right.
To see what that looks like.
Hold on.
And if you want to just throw that up there so we can take a look at it, that might be interesting. And again, we're not seeing confirmation of pushing up to new highs yet on this, and this is very much an equal weighted index. Also, since you mentioned on the daily chart of the S&P, the megaphone pattern.
Yeah.
I think it would be really interesting for people to see what a monthly chart, you'd have to take it back about 15, 20 years. I know you can do that on Thinkorswim. What a monthly chart of the Dow looks like.
Hold on. Keep talking.
Yeah, well, the ticker symbol for the Dow is $DJI.
This is called flexibility, let me tell you. You want a monthly chart?
Yeah. Yeah, you don't have to go into profit charts for that. You can do it.
Yeah, it's coming. I think it's coming here. There we go. Okay, I've got 20 years worth of data here on the S&P. You want the Dow?
I think the Dow illustrates it better. And then you have to compress the chart so you can see the whole, on the monthly, the whole 20 years in the frame.
There you go.
All right, now we were talking about megaphone patterns, and with just your drawing tool with a straight line, I think it'll be pretty easy to see a very, very long-term megaphone pattern on the Dow here on this chart. if you go back to like 2000 and draw the line across the highs, and then across the lows from 2002 and 2009.
Well, there's one there. Well, I mean, that's not, but the one you're talking
No,
about,
that's
you're talking about this.
not it.
You're talking about,
But there you go, and you even have to drag it out to like 2015.
well, hold on.
There you go. Now you just have to adjust it somehow. The point being, even if you're having, struggling with drawing the lines, the point being that there's a very apparent, very long-term megaphone pattern on the Dow. And, as you said, when you're talking about a market that's in the process of topping and displaying a megaphone pattern, there you go. Usually it does have bearish implications going forward. Now, this is a monthly chart that goes back over 20 years. Any bearish implications here are going to take a very long time to play out. Years, not just a few weeks or a few months, but years. But the setup is there.
Yeah. And again, what can it possibly do? Well, it can possibly just continue to work its way up the top of this megaphone. I mean, that's not unheard of. But then the only reason we call it to attention, and so Mike, does this make you bearish?
Well, it makes me bearish on the very long term.
Okay.
And again, I'm talking about years. I'm talking about long-term investments of maybe retirement funds and retirement accounts.
Yeah.
And it gives an idea, again, with these megaphone patterns. Very often the downside, the eventual ultimate downside target is a projection of the bottom line, which on the Dow could eventually take the Dow back down below 6,000. And as hard as that is for people to fathom right now,
Right.
I mean, it's not like it's never happened before. It has, although, those kinds of drawdowns have been pretty rare, but they can happen. But I think, illustrating the megaphone pattern on a very, very macro level is just, again, background information and an interesting thing to see. And also note with the oscillators at the bottom, the indicators on the monthly chart, the divergences that are setting up that haven't yet been confirmed, but they're pretty evident.
Yeah, and see, in my mind, a way of thinking, because basically Scott thinks we're full of crap and we don't know what we're talking about, and
Okay.
and he gets really frustrated when we mention these potential things that might happen in a bearish way. But the fact of the matter is, does that stop you from taking long trades? No.
No, because we're not talking about what could happen, Monday or Tuesday or next week, or even for the month of July, or even for the summer. We're talking about very long-term stuff. Just trying to encourage people to occasionally step back and look at the long-term perspective and not lose sight of the forest for the trees.
Yeah.
That doesn't mean on a short-term basis you don't keep navigating from tree to tree.
Oh, heavens, yeah, and that's what is very important, is to navigate from tree to tree, and so. Okay, Scott. Scott says it's okay to be a bear, just be a proud bear, and so. Well, I'm a longhorn, actually. Actually, I'm a longhorn and a bear because I went to university.
Well, isn't a Bruin a type of a bear?
It is. That explains a lot. Maybe that's what it is. And I'm a bull and a bear at the same time because I was a longhorn, graduated from there, and then I went on to do my grad work at Cal, and so they still don't know how to play football. Anyway.
Yeah.
Okay. Huh?
You know, before I sign off here, and you get towards the end of the presentation, you know, for those people who want to continue to be bullish on the short-term charts, and certainly there's every reason to be bullish on the short-term charts. You know, keep in mind, you know, again, price action is king, but what's driving the price action?
Yeah, that's the other thing.
What is driving this market? Because I will guarantee anybody listening in, it has nothing to do with the fundamentals.
Yeah. Well, one of the other things is, as Scott brings this up also, is that one of the things that is moving in unison with the market, which is kind of interesting, is gold. Gold continues to pile up the gains, and oftentimes, and so that's kind of a little bit of an oddity. So path of least resistance. Okay, let's say over the next month, Mike.
Well, at least in the very short term here, I mean, we have, you know, very strong upward momentum. So I would say in the short term, we're going sideways to up. In the very, very long term, because we're just looking at the monthly chart, very long term,
right.
I would down.
Yeah, and I would agree with that, Mike. You know, I'm certainly not going to be buying the market at these levels. I'm going to be waiting for a controlled orderly pullback, just because, I mean, that's part of our rules. I mean, I like to get the pullback into the 820 or even the 50-day moving averages, but right now, over the last, you know, since February, or since it had this last flash crash, it has been moving up. And so basically that's where we're at with that. I want to remind everybody that here's where we're sitting. We closed out those two positions. I hope that if you're a active trend trading member, that you got that. I stayed up late last night and sent out that I sent out the email that basically said I was pulling in my stops on both the Tesla and the Spider trade. Got stopped out of those for a, you know, good profit, okay profit for the week. And so here's where we're sitting as of the first full week in July. I'll be working this month on continuing to try to close this gap between my projected 40% gain, which will put us about close to about $24,000. Close that gap. Started to close a little bit last month, and then we got hit with last Friday. And so, and then on the Tesla today, we're continuing to sell premium against the two long positions in Tesla, and we're moving on in on that 100%. This is on the first position we have on Tesla, and then the gold trade that we started a few weeks ago. We jumped on gold with the anticipation it was going to go up. We did this as a debit spread. And last week we took off some profit at $3, which was 108% gain from what we initially started it, because we had bought it for $1.49, sold it at $3. We had sold a little the week before at $2.50. And oftentimes when you do these debit spreads or the spread type of things, it moves too fast. Or if it moves too fast, you can't absorb or collect all the premium you'd like to collect quickly. And then I've modified for my last target on the remaining 6 contracts is if I get up between 450 to 480, then I'll take some profit on that. I may reduce this simply because we have moved up so rapidly, and gold, these are starting to look a little bit more like exhaustions rather than breakaway gaps. I may say, you know, I'm going to take off half the position at $4. And so that's what we're looking at with that trade. And then if you're a band member, Bay Area Moneymakers, we did a webinar this past Tuesday night. We'll be doing another one on the 18th. Lyle Wright killed it with regarding some trader psychology. training session on this coming Wednesday at 6:30. Is it me? Getting past yourself in trading. And then I'm working on pulling together a few videos that I will be posting both for the premium members, and also I'll be posting this to the YouTube channel. How to do strategy 3, then timing entries, and more. I'm working on a series on that. And so, hey, with the active trend trading systems, what we work hard on doing is both providing a clear, simple way to help you multiply what you have. We're based on 5 pillars of active trend trading. We show what to trade, when to enter, when to exit, what strategy we're going to use, and what to expect. I believe that oftentimes people, oftentimes traders, they'll start trading strategies before systems. You have to understand the system, and then you add your strategies to them. And we have 3 different strategies we focus on: stock and index ETFs. This is a portfolio building strategy; basic options, both directionals and a couple of spread type trades; and then the wealth building, which is basically selling premium every week on both Tesla and the spiders. I'll leave this up for a moment. If you are not a member, I'd like to invite you to join the Active Trend Traders. Here's what is provided with the Active Trend Trading and the early warning alerts. And if you do them both, you get basically the whole enchilada. And then the way we send out alerts is we do them both by text and then by email when we're entering a trade, and then we'll email, and then basically once filled we email out how to manage the trade and continue to track those. So that's all I have for this week. Mike, thanks for joining us. Everybody else? Go ahead.
Final comment, if I could.
Go ahead.
I think it was Scott who made the observation a few minutes ago about the interesting price action in gold along with the stock indexes,
right,
because they've both been going up at the same time, which is, traditionally an oddity. And I would make the same observation to anybody who wants to take a look at it and read about it a little bit, about comparing the stock market and the bond markets currently.
Yeah.
Because typically speaking, when stocks are going up, bonds are going down. And when bonds are going down, that means the bond interest rates are going up.
Right.
Well, that's not happening right now either. Bonds are putting in, all-time lows in terms of their interest rates, their yields, which means bond prices are going up at the same time that the stocks are advancing. And there's a real interesting variation there from the historical norm also.
Yeah. And so, maybe they're right, Mike, this time. Maybe they're right when they say it's different this time, huh?
Well, there is something that's different this time, and what's different this time is the extent of the intervention and the heavy-handedness that the central banks are displaying when it comes to the financial markets. I mean, it is unprecedented. Going back to whenever central banks began to exist, and that is what's different.
Yeah.
Does that mean that the overall scenario is going to play out differently this time than it has in past similar situations? Maybe.
Okay.
Maybe.
Cool. So, hey, I'll take a couple of minutes and look at a couple of charts. Mike, thanks for joining me. Scott, thanks for the running dialogue. I appreciate that. I really do. You make up some good points. And let's see. I have a couple of questions to answer. One, Bob, wait till after the market, please, after it closes, because I got to get out some potential alerts. Dorothy, yes, I hope to see more active trend strategy 1 trades coming online. And then the rest of them is just reviews. So, hey, Mike, thanks a lot, buddy.
Okay, we'll talk soon.
Okay. So let's take a look at Okay, let's see. Gino, you wanted SUPN? Okay. Yeah, it trades well, on average about 250,000 shares. So that's, close to, that's, or 500,000 shares. So that's pretty good. What in the process, it's in the process of doing is it looks like, it's made its formation. I would want to do the stock checkup on it to see what kind of fundamentals it had, but it's starting to push back up into its old resistance. And as you can see, it's pulled back from that on the weekly chart. And so, look for it. It's got this really big, nice big cup. Let's see if we get a little pullback, 7 to 8% pullback down into maybe this level. That would be a handle to break on through. You can look at this on the daily chart. We just, it has, daily wise, it's in this nice uptrend, but it just did one of its thrust ups. Now you're waiting for the reaction back down. And you can lay on a, here's a little trick you can do, is go from here to here, then move that on up back up to here. And if it does something, with similar symmetry, that would put it back into a range of about 1950, 1957, which would make sense because it corresponds to these past highs over here. That's when I would be looking to potentially pick it up, or if we get back to the 820 for potential bounce. If you're already in it, with it bumping up against this strong resistance, that may be a time to go ahead and take some profit off the table, but certainly if it drops to 2027 level, to take some profit off the table. Where'd it go? Okay. Let's see, Tesla, be looking at Tesla, be looking at MXL, there we go, MXL. Nice move up today, higher volume. Again, this is about over 1 million. So this has just done its reaction move back down to the moving average, back to the level of support, and is starting to do its new thrust. The question is how far is it going to thrust? Is it going to thrust all the way to 21 or extend that? And on the flip side of that, figuring out where it might go, is you can go in here, lay in, and this is assuming symmetry, lay in that move there, activate it, pull it over to your next swing low, and that's showing that it would want to go up to about $22. So you've still got a little ways to go on that, but I'd be looking for, for me personally, I'd be looking for that pullback to the 50, the 8, or the 20 back into this area here. Tracy, you've got, what do you have, Tracy? I saw it, WB. What is Weebco? Yeah, nice. It looks like, boom, there we go. I don't know if it's breaking out to completely new highs here. Yes, it is. It's breaking out to completely new highs. It's doing its thrust higher here. Again, you can do a similar type thing. Go back to your, swing low. One of these swing lows like this one, measure to here, take it from here to here, and I'll tell you how much further you have to go. If you're in the trade and picked it up off, one of the moving averages, you want to be looking for, okay, how far can it potentially go from here? And so if I was going to do an extension based on symmetry, I would probably take that one. I don't want to duplicate that, but I will, and move it back up to that swing low. And it shows us that we've got, up there around the 33.40 to 33.08 level. And so let's see if, and the thing about it is the it may be being knocked down by the, what I'm trying to say, because you see that sellers are starting to come in and starting to sell it off a little bit. Let's take a real quick look at the fibs on this from here. I don't want that fib. Approximately there to there. And as you can see, Tracy, it has made it 618, it's 161.8 retracement or extension, and that oftentimes is a magnet where they will start resisting and forcing it back down. And sure enough, it hit that, and isn't it kind of interesting that that's the way that works? So I'd be looking for a pullback back down into the moving averages on this one. Volume's okay. And last but not least, I'll do Tesla, and then I've got to bug out. Can anybody type Tesla? There we go. Okay, Tesla did a nice little rebound, but as you said, Kieran, it is right up against resistance at the 220 level, which corresponds to the resistance over here. If we do a real quick fib on this from here, from this swing high to this swing low, it has made it up almost all the way to the 618 retracement, where you would anticipate that you would have some resistance. We have it. I will be looking at the potential of probably selling the 220 call against this for where it's at right now, with anticipation it would fall back down. It is looking kind of positive, and that's one of the things with Tesla that's really interesting from my perspective, is that Tesla, and I think Kieran, you emailed me about this, Tesla's got nothing but a lot of bad news lately, but it's still continuing to push up. Another potential trade for Tesla that you might want to look at that could be a lot of fun is to buy a strangle, that's buying a put and a call out in the earnings week, and then sell premium against that as we get closer to earnings, because typically earnings will go from the implied volatility on earnings, and I'll pull this over. I think I'll pull this over. And I'll just show you real quick here on Tesla. It has earnings August 5th, and no. Yeah, I'm pretty sure it has earnings August 5th. Or the week of August 5th, and as you can see, the volatility has started to increase on that, and that in the August 12th. But anyway, you can go in here and buy a strangle and then sell premium against it as you go up, and as the volatility increases, the value of those that particular strangle increases also. So with that, guys, I'm going to call it a day. Have a good one. Have a wonderful weekend. God bless everybody. Bye-bye.